This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
The U.S. Treasury Department on Tuesday issued a general license to facilitate the exploration and production of oil and gas in Venezuela, a long-awaited step that could help increase output in the country. Washington has relaxed sanctions on Venezuela's energy industry since U.S. forces captured President Nicolas Maduro in early January. It previously granted several general licenses to facilitate oil exports, storage, imports and sales from Venezuela. Oil drillers need U.S. authorization to use specialized equipment in Venezuela and to import rigs required to expand the country's oil output, currently at almost 1 million barrels per day. The U.S. Energy Information Administration said on Tuesday Venezuela's crude production could see an increase of up to 20% in the coming months.
Oil prices gained on Wednesday, buoyed by escalating risk as US-Iran talks remain tenuous, while signs of an easing surplus spurred by better demand support from India also added strength. Brent crude oil futures were up 57 cents, or 0.83%, at $69.37 a barrel by 0711 GMT. U.S. West Texas Intermediate crude rose 56 cents, or 0.88%, to $64.52. Oil retains a bullish tail risk bid as US-Iran talks continue but remain fragile, keeping the Strait of Hormuz risk premium supported amid ongoing sanctions pressure, tariff threats tied to Iranian trade, and heightened U.S. regional military posture, LSEG analysts wrote in a report.
Moving on to the top news in the energy sector.
U.S. power consumption, which hit its second straight record high in 2025, will rise further in 2026 and 2027, the Energy Information Administration said in its short-term energy outlook on Tuesday. The EIA projected power demand will rise from a record 4,195 billion kilowatt-hours in 2025 to 4,268 billion kilowatt-hours in 2026 and 4,372 billion kilowatt-hours in 2027. Demand is surging in part due to data centers dedicated to artificial intelligence and cryptocurrency, and as homes and businesses use more electricity and less fossil fuel for heat and transportation.
2 Saudi Arabian and 3 U.S.-based firms are set to form a consortium for oil and gas exploration and energy production in northeastern Syria, according to 2 people with direct knowledge of the plan. Baker Hughes, Hunt Energy and Argent LNG are planning to partner with Saudi's ACWA Power and TAQA for the project, which would cover approximately 4 to 5 exploration blocks in the northeastern region, the sources said. It would be the latest in a series of big business deals spanning Syria's economy since former autocrat Bashar al-Assad was ousted by Islamist rebels turned rulers a year ago, and after the most stringent U.S. sanctions were lifted in December. Next, we have the top news in metal markets. Gold prices gained on Wednesday, buoyed by a weaker dollar and lower treasury yields, while investors awaited key U.S. jobs data later in the day for clues on the Federal Reserve's policy outlook. Spot gold was 0.5% higher at $5,048.27 per ounce by 0831 GMT. U.S. gold futures for April delivery gained 0.8% to $5,072.60 per ounce. We've seen a bit of a weaker U.S. dollar during the past trading days, which has helped gold and is likely lifting the price today, said Julius Baer analyst Karsten Menk.
Iron ore futures struggled for direction on Wednesday before erasing early gains, despite top consumer China pledging financial support, after a raft of lower-than-expected consumption data highlighted weak demand. The most traded May iron ore contract on China's Dalian Commodity Exchange was down 0.07% at 762 yuan and 50 fen, $110.31, a metric ton. The benchmark March iron ore on the Singapore Exchange was trading 0.28% lower at $99.90 a ton, as of 0700 GMT.
We will now look at the top news in the agricultural sector.
Chicago soybean futures rose on Wednesday despite bearish data in the U.S. Department of Agriculture's monthly supply-demand report, as parts of the market pegged hopes on greater exports to China. The most active soybean contract on the Chicago Board of Trade, CBOT, rose 0.1% to $11.23 minus 3/4 a bushel by 0313 GMT. CBOT wheat gained 0.6% to $5.31 minus 1/2 a bushel. Corn was up 0.1% at $4.29 a bushel. The USDA raised its estimate of soybean production in top world supplier Brazil to 180 million metric tons, from its previous estimate of 178 million, above an average of analyst estimates for 179.39 million.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.